Discover how Singapore's big three banks drove the STI to outperform all Southeast Asian markets in 2024, creating wealth-building opportunities right at home. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've produced over 600 videos with more than 280,000 watch hours as of November 2024. I also focus on regional and world economy topics. Think of Singapore's stock market like our favorite hawker centers. Some stalls always have long queues, while others might be quieter. This year, our local banks were the star stalls, and their success made our whole market shine. The numbers tell an amazing story. Our stock market went up by 15%. The highest in all of Southeast Asia. Remember when we used to say Orchard Road was the height of Singapore shopping? Well, our stock market just hit its own shopping peak, 3842 points. That's the highest since 2007 when it reached 3906. Imagine climbing Mount Faber and almost reaching the top. That's how close we got to breaking our all-time record. Now let's talk about our three banking giants, DBS, OCBC, and UOB. Picture them as three strong pillars holding up our market. DBS shares grew by 41.6%. That means if you put $10,000 in DBS shares at the start of 2024, you'd have $14,160 now. OCBC and UOB weren't far behind, growing by 26.9% and 25.8%. Here's something interesting. These three banks make up more than half of our stock market's weight. It's like having three heavyweight champions in one team. Without them, our market would have only grown by a small amount, like getting 2% interest instead of 15%. You might wonder, why did banks do so well when other big companies struggled? Take Singapore Airlines, which dropped by 2.75%, or Wilmar International, which fell by 15%. The answer is simple. Banks made more money because interest rates stayed higher than people expected, like getting better returns on your fixed deposits. Let me share a real example. DBS, our largest bank, didn't just wait for high interest rates to make money. They were smart, like a savvy auntie who knows all the best deals. They improved their wealth management services and bought back their own shares when the price was right. This smart thinking helped their stock price jump by 41.6%. DBS emerged as the clear leader with a 41.6% stock price gain and record Q3 profits of $3.03 billion, up 15% from last year. Their success came from strong wealth management fees and strategic share buybacks. OCBC achieved impressive results with a net profit of $3.93 billion in the first half of 2024, showing a 9% increase. Their wealth management fees grew by 19%, while their trading income jumped 28%. UOB's performance was equally strong, with Q3 2024 profits rising 16.5% to $1.6 billion. Their net fee income grew 7%, driven by wealth management, while their trading income surged 70%. The STI's 15% gain outpaced all Southeast Asian markets. Malaysia's KLCI started strong with a 10% gain by July, but ended the year at 9.6%. Looking at the broader Asian context, Taiwan led the region with a 28.85% gain, followed by Hong Kong's Hang Seng at 16.52%. Singapore's performance is particularly impressive considering it came from traditional banking rather than the tech sector that drove other markets. For those interested in participating in Singapore's banking success, here's what you need to know. DBS shares currently require the largest investment, costing between $3,200 to $3,800 for a minimum lot. OCBC offers a more accessible entry point at around $2,500 per lot. The banks offer attractive dividend yields, DBS at 5.1%, OCBC at 5.6%, and UOB at 5.3%. These dividends provide steady income potential alongside capital appreciation. Singapore banks are considered a safe haven from market volatility, with analysts expecting stable earnings through 2025. Even with potential U.S. interest rate cuts, the banks have taken steps to protect their income streams. But what about next year? Well, it's like planning a trip. You need to check the weather forecast. Our bank CEOs are actually feeling positive about 2025. They think that even if things change in America or China, our banks are ready to handle it. More companies might even come to Singapore to do business, which could be good for our banks. However, we need to be careful. Just like how HDB prices can't keep going up forever, bank stocks might not grow as fast next year. Some experts say the current prices are already fair, like when your favorite chicken rice stall reaches the right price point. There's also talk about harder times ahead, but our banks have shown they can stay strong even when things get tough. Here's what you really need to remember. Singapore's banks have proven they're like the gardens by the bay. They can adapt and thrive in any weather. While we can't predict exactly what will happen next year, understanding how these banks work helps you make smarter choices with your money. Want to learn more about bank stocks? Check out my video, Singapore Banks, the hidden 30% gain you missed in 2024. Just click the link in the description. If this video helped you understand our market better, hit that like button and subscribe for more simple explanations of Singapore finance. Remember, whether you're saving your first $1,000 or managing millions, knowing how our local banks work is key to growing your wealth. Thanks for watching, and I'll see you in the next video.